Hey, what's up, everybody? What's going on? It's Thursday, September 22nd. Feels like Friday for some reason. I don't know. So there's good news and there's bad news. The good news is yesterday we saw the first day of positive fiscal flow in 6 days. Well, 5 days. The last 5 days we had a net drain of 118.5 billion. Yesterday, as I said, we're probably going to see a positive day because of Social Security, but that's the good news. The bad news is that net positive flow was only 5.7 billion. That is, I gotta say, that's a big disappointment because ordinarily on a Social Security payment day, we see like 24, 25 billion net positive flow. We only got 5.7 billion. So the drain for September, you know, it got cut a little tiny bit, but it's still like 140 billion drain so far for September. I don't even know now about the October 6th. I gave you that October 6th date when I was kind of guesstimating that the drain, that tax drain period would be replaced. But you know, if we're only seeing a 5.7 billion positive flow on a Social Security day, I mean, that's no good. That is no good. And I don't know, these tax drains are brutal, man. They're brutal. I never anticipated this magnitude. You know, I was telling you guys back in June, hey, we're going to have this happen in September. I gave you the date, September 15th. It's going to be negative for the market. I said from mid-June on up to July to August, we're going to have a good market, which we did. And then I said, watch out for September 15th. And, you know, but I don't know, man. These are, you know, I was thinking 110, 120 billion, not like almost 150 billion. And now the recovery, like yesterday, should have been 24, 25 billion. And still, that puts us a long way from recovering everything that was drained out. But man, 5.7 billion, that is, I don't know, it's scary. That raises the likelihood that, I mean, if we don't see like better numbers, and worse, if we start to see more drains, you know, those June lows are going to be taken out. I mean, I could say that with absolute confidence. I mean, if we start to see, you know, net positive flows, then I think we can avoid seeing the June lows taken out. But I mean, 5.7 billion on a Social Security day, I don't know. It's just, that's rough. That's bad. That's bad. I mean, there's no other way to state it. That's bad. I want to talk a little bit about sentiment. The AAII weekly sentiment survey, which I checked and I sent out an email on that, but we saw in that survey the bull minus, first of all, the bulls were way down. Obviously the bears were way up. But the interesting thing in this week's survey was that the bull minus bear spread, you know, I tracked that spread, the differential between bulls and bears, that hit the most negative reading ever since they've been compiling the data, which I think it goes back to the early 1980s. I have the database on an Excel spreadsheet, and I went through it, and this week's bull bear spread, bull minus bears, minus 43.2. That is an historic negative. Okay, we have never been that negative. So that, you know, just another sign right there about how unbelievably pessimistic and negative the market psychology is right now, at least on the part of individual investors. So that obviously is a contrarian indicator, but it's not a timing device. I've said this in the past. it's been, I mean, that thing's been negative for the last 42 out of 44 weeks. And the 2 weeks that it was positive, that's back a ways. That's like 28 or something weeks ago, you had a really minor positive week. And then way before that, so it's really been negative for like 42 out of the last 44 weeks. So it's not a timing indicator, but it is, in the big picture, it's a contrary indicator. And, I'm sure we'll look back at that at some point and say, wow, that period in 2022, from like March until whenever, that was just, an incredible time if you were a long-term investor to be accumulating positions in stocks. But of course, the overriding thing right now, at least market psychology-wise, is monetary policy. I don't fret over that. I understand how that triggers behavior. You should probably understand that now too. I see more and more commentary on a daily basis. It's funny because this is really starting to pop up now about how, and I mentioned this, about how rate increases will require the government to, it's going to add to the government expense to pay more. But the way it's being framed is that, that's a horrible, terrible thing. The government debt is going to go up. The government's going to have, pay more, have higher costs. Nobody is giving the other side of the picture, which is the money is paid to people. It's paid to pension funds. It's paid to, the income transfers from the government into the economy are going to be huge. Okay, just as they say, well, the expense is going to be huge. It's not an expense, that's the normal course of government spending. But I mean, those are income transfers into the economy. Anyway, I just find that fascinating that, people just leave that out. And once again, it goes to show you how everything, number one, everything is framed in a negative light. Number two, there's a complete and utter lack of understanding, of what this really means, what it portends, the implications of this. All right. And so, it feeds into this mindset of everything being negative, everything being negative. By the way, we saw today weekly initial unemployment claims. They were up just a little bit. I think they were at 216 or 219,000 or something like that. So they're still like really, really low. We don't see any evidence of any sharp increase in weekly unemployment claims. I think that's probably a pretty good indicator of the labor market right now. We got Costco earnings after the bell. They were very strong, blowout, very strong earnings. So, consumer seems to be holding up. Labor market seems to be holding up. And stock market is struggling with the fear about monetary policy, about Powell. But this has been the case now for a while. I still think, and again, it concerns me. I have to be honest. It concerns me that yesterday's flow was so weak, 5.7 billion. That is a concern. We've just drained out almost 150 billion. 5.7 billion. That's a pittance. We need to see better positive flows than that. But I'm still sticking to the viewpoint that it's slow and agonizing and it's frustrating as hell. But I do think we are putting in a bottom here. I think the worst has passed. Yesterday was evidence of that, even though it was like scant evidence. The worst has passed. That was the September tax drain, which, I told you about 3 months prior to when it was going to happen. And I do think the monetary environment is going to improve. But it's just going to take some time. And I'm not sure about the October 6th. I said October 6th was the date, that you could kind of sound the all clear bell. But at this rate, I don't know. I really don't know. I'm going to need to see a few more days. Today's sell-off was a disappointment, but it's totally understandable given these flows. I think if we had a stronger, or let's say a normal Social Security day of 24, 25 billion, you would not have had the sell-off today. In fact, the market tried to rally. At least the Dow and the S&P tried to rally, and then they got slammed again on the close. The Nasdaq was weak all day. Yeah, I need to see a couple more days at least to find out if we really turned the corner. I think we did turn the corner, but we turned the corner real slow. All right, or let's put it this way: we are turning the corner real slow. So look, I know it's nobody said this is easy, and but what's easy is you can get negative and down, mentally. I'm talking about really easy. I mean, you could get, but some people love this. I mean, I know there's a lot of people out there, they want the market to crash. They want, the Fed to crash the market, even though it has nothing to do with the Fed. They want this to happen. It's like, it would be like a validation of their view. I understand that. There are people like that. Lots of people out there like that. They want this to happen. So yeah, that's a whole other, universe of market participants. But, if you have a portfolio, if you have a 401k, if you're an investor, even if you're a trader and looking for a bounce here, I understand that this could be frustrating and this could be disappointing, and it's easy to get down mentally when you have this kind of grind every single day, and when the news bombards every single day negative, and this is happening, and rates and inflation and that. Especially I would say, if you understand, like we do, what these things, what they all imply, and how it really functions. Okay, I'm not talking about the narrative about this being negative because rates are going up and not, the government's going to have a higher expenses and all that stuff is nonsense. I'm saying if you really understand and you have the correct knowledge, and then you see this wall-to-wall narrative that is just complete and utter misinformation, yeah, that gets you down. Definitely. Or that could get you down. No question about it. It's maddening, but I mean, it's not going to change. It's never going to change. I mean, that's just, that is an embedded belief system. And I don't think, anything's going to come along to turn that around. I really don't. That's just kind of like a deeply ingrained belief system. And it's just, you just got to be able to understand that it's out there. It triggers certain kinds of behaviors. And at the same time, it's frustrating. But hey, look, there's worse things we got to deal with. Anyway, that's it for today, folks. It does feel like a Friday for some reason. I don't know why, but it's not. It's Thursday. So see you tomorrow. Bye.